Good day, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome back to Earnings Call. If you're familiar with our program, you know that we just talk about stocks and their earnings. And if you're not familiar with us, we actually dive in and talk about what strategies are appropriate for trading stocks earnings around stocks. All right. And there's two different types. There's these breakout stocks that we talk about, and there's these quiet stocks that we'll talk about. We'll get to that in a moment. But right now, we're looking at the week of August 25th, 2025. Believe it or not, we're on the backside of earnings season, but we have over 55 stocks that we are actively watching this week. And there is one bellwether. Even though we got a bunch of retail, we got all the Canadian banks declaring earnings, but there's some mega caps, and specifically one, and that is Nvidia. And all eyes are on Nvidia. We will talk about that too. So let's get rolling. Don't forget, we talk about a lot of stocks, so you can use the chapter feature at the bottom of the video to jump ahead if you would like while watching the recording. But here is our list of stocks that are declaring earnings this week. On the left-hand side, we have the potential breakout stocks. Okay, these are stocks that are have an average move of double digits, meaning well over 10% for most of these. On the right-hand side, we have the quiet stocks. Okay, stocks that are going to only move single digits. And we're actually going to start with this list. So let me show you what a quiet stock looks like. Now, for these stocks, we trade usually Iron Condors because we sell premium. Implied volatility rushes into the options, and we like to sell that high implied volatility for these quiet stocks. Here's an example of Pfizer. Now, Pfizer does not have earnings this week. In fact, they don't declare again until November. But this is a perfect example of a quiet stock. You can see that the stock just bounces around in a very quiet range. And even through earnings, it just moves single digits. Okay, so that's what we mean by quiet stocks. And again, we're selling options into that earnings announcement and looking for that small move and then the following implied volatility drop after earnings. And that's how we profit on these. We're actually going to look at an example of that from last week here later in the show, so you're going to want to stick around for that. But let's take a look at our list, and we're going to begin to go through that list here in a moment. And there's some familiar names there. You're going to see all the Canadian banks. They're going to be nice and quiet. Then on Wednesday, we got big old Nvidia, but then also the retailers and some tech. Okay, so Dick's, Dell, Burlington, and Alibaba to close out the week. So let's get right to it. We're going to start with the quiet list here. As I mentioned, we have Heico that declares earnings today after market close. Okay, so that's today, Monday, August 25th, after market close. And believe it or not, this stock does have an average move of about 9%. So as long as you go 10% away in price and sell options, and don't forget to buy further out of the money options so that you are protected and hedged. And that's exactly what an Iron Condor is. We do this through one of our publications called Delta Neutral Income. All right. And we take advantage of this IB rush right before earnings and then the drop right after earnings. Okay. So Heico has earnings today after market close. Now, moving ahead a little bit, we get into the Canadian banks here. So Bank of Montreal, BMO, otherwise known as BMO, they will declare tomorrow morning, Tuesday, August 26th, before market open. They have an average move here of only 5%. Now, usually with these stocks, okay, anything over $100, I really like because there's option premium available further out of the money and that make the trade worthwhile. When you get down to stocks that are $30 or less, it's a little harder to do, but still doable, especially because implied volatility rushes into these options prior to earnings. But I would definitely look at some of these as potential candidates. All right. Bank of Nova Scotia, or otherwise known as Scotiabank, they will have earnings on Tuesday, August 26th, before market open. And the average move here is just 3%. All right. These banks are so big, they really don't move around very much. And so a small move here, even though, again, look at this uptrend. This is a very nice uptrend, but really it's only gone from about $51 to $57 over the course of 3 months. So it may look like this stock is a mover, but look at my scaling here is in $1 increments. If I pull the chart down and put it into, let's say, $5 increments, all right, you can just see how quiet that stock is. And it's just melting higher, which is fine for you would prefer that over it melting lower if you were a stock owner. But again, we're only expecting a 3% move there. Okay, and closing out our Canadian banks here is the Royal Bank of Canada. All right, they have earnings on. Well, let's just see there. Since my let's just see if my box. Well, my box disappeared. So let me just tell you what it is here on Royal Bank of Canada. And I know why that happened. Okay, so Wednesday morning. So that will be, they will declare Wednesday morning, August 27th. And the average move there is going to be under 5%. Okay, for Royal Bank of Canada. That's why they're on their list. So another nice stock, $136 value here. And we will anticipate, let me just put that little deal right there. Okay, so that's when they will declare, is on Wednesday. And we expect them to have a nice, quiet earnings announcement, even though implied volatility is rushing into those options. All right, so you waited for it. Here it is, Nvidia. Now, believe it or not, Nvidia only has an expected move or an average move of 7%. Okay, this used to be one of our more aggressive plays. It was really volatile, moving double digits, but this stock is now much more mature. And after the stock split, where things really changed, even though it has rallied up a lot and still looks good as far as its movement and its performance through the earnings event, it's only going to be single digits is the anticipated, unless they really have a blowout positive announcement, or they absolutely have a miss. Then we could see a possible double-digit move. So all eyes are on Nvidia, and this might be one. This is a $180 stock, so definitely one that is Iron Condor friendly. But if the stock does move huge, and if it does move double digits, that might be a problem for your trade. All right, so even though it meets the criteria for a quiet stock, I would trade small on this, meaning I wouldn't bet the farm or bet anything that is out of my range. In fact, I would probably reduce my average position size and yet still take advantage of it because it does meet the criteria. Okay, then we have a couple of retailers here. So Dick's is another stock that used to be on our big movers list. It has, I guess, matured enough that it is dropping down on its volatility. They declare on Thursday, August 28th, before market open. So first thing, Thursday morning, the average move here is 7%. Okay. Again, former big mover, not so much anymore. Now this thing moves under 10% through earnings on average. Yet this is a $228 stock. We are definitely looking to sell premium on this and take advantage of that IV crush after earnings. Okay. Now, Burlington, I do like this pattern here of consolidation going into the earnings. Okay. But they only have an average move of 6%. Okay. So normally I'd love this pattern for a volatile stock and where we do straddles and strangles, but that's not the case here. You can see on even this last earnings announcement right here, this big candle, volatility up, volatility down. But in the end, it was a small percentage move on the close of business that day. So again, Burlington will declare on Thursday, August 28th, before market open, and an average move here of only about 6%. Okay. Now, Dell Technologies, again, another big mover in the past, not so much anymore. Okay, you can see on the last earnings announcement here back in May, the stock just had a little volatility during the day, but did not move very much. Dell will declare on Thursday, August 28th, after market close. So after business on Thursday, and we expect a move here of around, definitely in the single digits, but around 7%. So again, love a stock in this price range. $130 gives us plenty of room above and below to sell premium, make it worth our while, and only a 7% move. Closing out the week, Okay, on Friday morning, we have Alibaba. If you're not familiar with who Alibaba is, just think the Amazon of China, except on steroids. Okay, big company. They will declare on Friday morning, August 29th, before market open. But the average move here on Alibaba is only 6%. Okay. So $124 stock, you could definitely go 10% out of the money and sell your premium. Occasionally, these stocks do jump a little bit more than they would on average, but most of the time, they're right in the range. Okay. And again, these are the average moves. The market, last I checked on Baba, average market maker, the market makers were pricing in about a 5.8% move. Was where the pricing was. So you definitely want to take advantage of that implied volatility. You can see on the last earnings announcement here, the stock did drop down a little bit, but again, still within that 5%, 6% range. So we don't we'll expect a little bit of a jump or a drop for Baba, but again, still in the single digits. All right. So that is it for our quiet stocks. And now we move on. We move on to the volatile stocks, the stocks that usually have big breakouts. And how do we trade these? Well, we trade these through a publication of ours that is known as Delta Neutral Breakout. These are stocks that we look to move more than 10%. Big movers here. Let me show you an example of this first. Okay. Let me show you a chart of Akamai. All right. Akamai, this is what a volatile stock looks like around earnings. I have the earnings highlighted with the ellipses there, and you can see this stock moves around pretty big around earnings. Now, Akamai does not have earnings this week. They also don't declare until November. So we will look forward to trading them here in a couple of months. But let's look at our list once again. I saw it pop up there. Let's pop it up again. Okay, and you see that we start off today with some names. You know, we had PDD this morning, Semtech tonight after market close. Some familiar names all throughout the week. So let's get to the charts here, and let's begin with Semtech. They're the ones that I wanted to highlight for today. They're going to declare today after market close, so that would be Monday, August 25th. Let me correct that there. Okay, after market close. And the average move here is 16%. Now, I just priced out Semtech, and options are pricing in for a 20%, about a 20% move. But you know, that means you would need the stock to move over 20%, okay, to make any money on it. So that the good news is they're anticipating a bigger move for Semtech, but the problem is we would like them to misprice it and only price in like a 14% move, and then the stock move 20%. Again, straddles or strangles are what we do here. And yes, we would buy that high implied volatility. We don't mind doing that because we expect a big move in the stock. But Semtech, we're a little under on the underside of that, so I would watch out for that. Now, MongoDB is going to declare tomorrow after market close, August 26th, and they are a big mover also. And you can see last earnings, this nice little pop that they have. The stock literally went from $199 or $200 to a high of $237 before closing at $225 on the day. Okay, so from $200 to $225 on open to close, or a close to close, and so they are a big mover. The problem is, once again here, this is the problem with this one. This is a $217 stock. I priced this out. The straddle is going for about $3,500. You would really need a trading account of about $100,000. You could do it with less, maybe $80,000. But again, one contract on each side, one call, one put, is going to price you in at about $3,400. So you definitely don't want to be doing this with a $10,000 trading account, just because that would be 34% of your portfolio on one trade. And what if it doesn't work? Okay, you always have to think about, what if I'm wrong? Okay, well, the average move here is 19%. We could see a bigger move for Mongo, but you know, this might just be a good one to watch unless you have a bigger account and it can absorb that type of swing. You only want it to be 3 to 5, no more than 5% of your portfolio is where you want that debit to be, because you want to preserve capital. any trade really. Okay, over to Okta. OKTA is the symbol here. They will declare tomorrow on Tuesday after market close. The average move here is 17%. Okay, you see, we do tend to get some good moves out of this stock. Big move down. Last time the stock went from 125 down here to about 105 in a heartbeat. Okay, and if we go back, you can see that this stock does gap around on these earnings. Okay, so definitely, we have traded Okta before. We've had pretty good success with it. We may trade it again if the pricing comes in, and we would do that through our publication, Delta Neutral Breakout. If you want to learn more, you can go to ewotrader.com and find out information on that. Okay, so moving on, we get into some of the retailers here. Abercrombie and Fitch. Okay, this is a mover. All right, believe it or not, this retailer, they will declare on Wednesday, August 27th, before market open. So in the morning on Wednesday, they have an average move of 18% for Abercrombie. Again, another stock that has been on our list. We have traded it several times. We have had some nice success with Abercrombie. It's all about where the pricing comes in. Okay. So if I can get the options for less than 10% of the stock price, meaning under $1,000 here, then that kind of brings it into the playbook here. I would love to get a trade on for that amount, and then the stock to move 18-20%. That's how we make money on these things. Okay. Moving on, we have Urban Outfitters. They will declare on Wednesday after market close. Okay, that's August 27th after market close, and the average estimated move here is lining up at 17%. Okay, you can see the last earnings announcement, the stock did gap up. Then after the big gap up, look at this, pretty quiet. All right, pretty quiet. So now it's been chopping around in a range between $73 and $80, and that is just building up, I think, some tension, and we could have a bust out move for Urban Outfitters here on Wednesday. Okay, so moving on, Hewlett-Packard, believe it or not, HPQ. All right, after a big drop last earnings announcement. This stock has rallied, making some higher lows, and now has pushed up higher, going from about 24.5 to 27.5. And we are looking for a move here of over 11%, about 11% for Hewlett-Packard. But again, this is a bigger, mature company. They are going to, it's a little tougher to move the needle. So they do have a double-digit average, and but it's on the lower end of our scale there at 11%. Okay. Now Best Buy comes in with earnings on a Thursday before market open. Okay, so moving on to Thursday, this will be an average move of 13% for Best Buy, and they didn't quite move that last earnings. Okay, but earnings in the past, they have moved nicely. Okay, they do gap around on these earnings announcements, but I would be careful with Best Buy. Again, a bigger, more mature company, and the reason why I like it and it's on the list is really because of the impact of tariffs, which all of a sudden a lot of the talking heads are talking a little less about their tariffs negatively impacting, or maybe impacting for one earnings cycle. And I think every CEO is now knows what their numbers are going to be with the tariffs for the country that they are importing from. And I think some are using it as an excuse for raising prices, because I know a lot of American companies that actually make their products in America that are blaming tariffs for raising prices. So I think that's kind of odd, and I hope some people in charge do something about that. Okay, so anyway, I won't get on that soapbox. Let's go over to Affirm Holdings. I have enjoyed trading Affirm before. This is a below $80 stock. Okay, they will declare on Thursday, August 28th, after market close. They have an average move of 20%. This stock does move around. Okay, this is a financial company. Now, last earnings cycle, they did have a little quieter move, but in the past, this stock has really catapulted around. Okay, gap up, then follow through to the upside. We'd like to see that. Okay, we don't like to see this right here. But again, I like to seeing the consolidation pattern here, trading between $70 and $80, just chopping around and waiting for a move. We could see, what the impact of the consumer is, because Affirm does kind of shorter term loans and interest free and interest rates that are a little in the mid range. Okay, so we'll see how they do on Thursday. Okay, and closing out the week on Thursday, we have Ambarella. Ambarella is a $71 stock. They will declare Thursday after market close. The average move here is 18%, and this stock does move. Okay, they usually move double digits around each and every earnings cycle. As you can see, a little volatility. Now, this type of move I don't like, where it gaps up. I would like to see fall through to the upside or gap down. I would like to see a candle where it goes down. I don't like the gap up and reversal, but this was I believe a 16-17% move on that earnings cycle back there, and we're expecting a big move again on Thursday for Ambarella. But make no mistakes, all eyes are on Wednesday when Nvidia declares, and we'll see how that. So the way Nvidia goes will be the way the rest of tech goes for the most part. So all eyes on Wednesday. All right. So as you may know, let's bring up the list once again. You can see we have all the banks, which kind of we'll get the banks out by Wednesday, and the Canadian banks. So the reason those are interesting is because of tariffs. Okay, and the impact on the Canadian economy, not on ours. Okay, so that's why those are interesting. And then you have some retailers: Abercrombie and Fitch, Urban Outfitters, Best Buy, Dick's. Okay, we talked about all those. Some tech with Dell, Nvidia, obviously, and Alibaba is more tech and retail combined there. But yeah, that's your list for this week. Those are the best opportunities of both quiet that are on the right and volatile that are on the left. All right, so. And as you know, we do offer a trade each and every week here on the show. All right, we got a pretty good track record. I looked at the track record here just recently, and based upon all the trades we've done on the shows for 2025, we're actually up 84% this year. Okay, not 84% winners, but 84% on portfolio is what the average is if you are basing it on a $10,000 trading account, which I try to keep those all in line here for our trade. So let's take a look at those at our trading opportunity that we had last week. Okay, so last week we had TJ Maxx, and this is an Iron Condor. All right, so focus on the black line there where it changes directions 4 times. All right, we want that stock to stay in between the light blue lines, but every time that black line changes direction, that's a strike. So this is a 4-legged trade. There are 2 puts and 2 calls, okay? And we're net sellers, selling the call spread, selling the put spread. You combine those together and you get a credit. And with that, then the credit, it comes off of the margin. In other words, this, I believe, was a $5 spread, and the credit we received was about $1.10. That means your risk is going to be $3.90. Okay, so why would you risk more than what you can make? Well, because of the high probability of success. That's why you put those odds in your favor, and you are just like the bank. Okay, you are just like the casino. All right, you're putting the odds in your favor, and you are taking in that premium, and you're going to keep that premium as soon as those contracts expire, or you exit out. Either way. So how did we do? Well, this trade technically is still open, but right now we're up 20% in the trade. That's up 20% in 1 week on the trade. We're up $81. Now, $81 may not sound like much, but that's for every spread that you do. So if you did a $10,000 trading account and did just 1 contract on each of the legs, okay, that would be $81. Doesn't sound like much, but right now that's 0.8% on portfolio in a week. I would take that all day long, each and every week. Just give me 0.8% on my money every week, and do that all through the year, and you are going to be a Rockstar portfolio manager, let me tell you. Okay, but if you did more contracts, obviously better good numbers, you could close that out today, or you could keep an eye on it. And the goal there is to let the legs expire if the stock allows us to do that, because you can see the stock gapped up outside the break even of the trade, but then traded lower all day last week. Okay. And then Thursday had a little up day, Friday a down day, and now today another down day. And that's where our profit is coming in on TJ Maxx. Okay. So good trade. You could take it off today and lock in that $81. You could wait and earn that theta decay. Our credit on this was $1.10. Now, if you get that $1.10, that's a 1.1% return on portfolio. Okay, you do that every week, and again, you're making 4%, over 4% return on portfolio every month, and you annualize that out, and you are a superstar, rockstar portfolio manager if you can just maintain that success. Which, hey, it's all about managing your portfolios and being conservative, yet taking advantage of these opportunities. So what do I have for you this week? All right. Well, we are going back to the breakout side of things. All right. Our trade for the week is going to be Urban Outfitters. Okay. This will be a strangle. Okay. Remember, I said on these volatile stocks, we do straddles or strangles, and we look for the one that gives us the best opportunity. And the strangle not only is a little cheaper, but the break evens are a little bit more narrow than what the straddle was. So we are going to do a strangle where we buy an slightly out of the money call and buy a slightly out of the money put. And we combine those together. You can do them as a single trade with every broker out there these days that does allow options trading. And you do this strangle, and it's going to cost you around $700. So if you are a smaller trader with a $10,000 account, that would be 7% of portfolio. I'd be very careful with that. So try to be $15,000 portfolio or bigger, and that'll keep your risk low. But I would be quick on the trigger. If I was a smaller account and trading this and the stock didn't move, I would definitely be quick on the exit here. But we do have earnings in 2 days on Urban Outfitters, and that is what we would look at for our potential trade and the potential profit to come with us. Because all it needs to do is break above or break below those light blue lines, and we will profit on this particular trade. All right. So that's our show for this week. I hope you enjoyed it. If you did, give us a like, subscribe to the channel. And we do this each and every week. We talk about earnings, we talk about stocks, and we have weeks like this where there's 102 companies declaring earnings this week, and I'm focused on half of those, which is rare on the backside of earnings season. Okay. But next week will be Labor Day, so enjoy the holiday. We will not be doing a show next week, but I'll be back with you in 2 weeks with more opportunity. So everyone have a great trading week, and I'll see you again here in 2 weeks. Take care.